Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today we will take a look at the Japanese yen because really some new inputs have appeared here since our recent discussion. Mostly, although the euro currency is the primary currency that we're watching for, but we mostly have said everything yesterday. Market mostly stands in the same area and is choosing the direction today, the European Central Bank meeting. That will be extremely important for euro currency. So that's why I think that currently hardly we could add something really new to our discussion. So we expect that market has the chances to complete 109 target before upward retracement will done and before market will reestablish downward action. That's what we mostly talked about yesterday. So since we have some kind of the double repo lookalike pattern and has targets from 109 on intraday charts, also market shows some bullish moments. So that's why we have estimated that our nearest retracement target stands at 109. At the same time, as we said on the euro currency, the major target stands at 104. It's weekly ABCD pattern, and we suggest that no real upward reversal could happen until market will hit the major target. So usually markets very rare leaves behind untouched important targets. This could happen only if some really drastic changes have come on the market, some political events, disasters or something of that sort. But in the normal conditions, in 99% the market first will touch target, second will show the reversal or retracement. That's why currently we think that upward action that stands right now on the euro currency is still retracement, and it's sooner or later it will finish. And we should not treat it yet as the possible reversal of some really big changes in the sentiment or something of that sort. So now about the Japanese yen. On the Japanese yen, I just would like to remind you our setup that we have started to talk about last week. As you can see, Japanese yen right now stands at a very significant resistance. This is weekly chart, guys, and as you can see, market has reached major 618 resistance around 1550 area. Also, it has completed this weekly large A, B, C bottom 1618 target. At the same time, it stands at weekly overbought. So here we have the combination that provides us two directional patterns. Although they have approximately the same feature, but they are still different. First pattern is the Judnapolis stretch. This is the combination of the overbought with the fib level. So you could say that probably the market hasn't quite reached the major level. That will be correct. Here some distance still exists, but that's based on the major top. If you will draw the fib level from that low, from that top, or even from this top, you will see that this, in fact, some combination of the 618 levels from the different points. That's why probably this could be treated as some kind of the 618 resistance area. So another pattern is the, as Judd Napoli calls it, this is the Kibit rate. The Kibit rate is the combination of the overbought with the extension, so with the reaching of the ABCD pattern target. You can see here we have as the first one as the second. So this is some kind of the agreement, but probably we could call it as the agreement if we would bring another 618 resistance as maybe from that top, just to make them closer, standing closer, the ABCD target and the 618 level. But anyway, this is, guys, very strong resistance area. That's why here, guys, our setup mostly tactical. We do not pretend on the statement that Japanese yen will turn down and will start dropping below these lows or something of that sort. Absolutely not. That's not our interest right now. We're mostly interested with the tactical bounce here. Just to respect this strong resistance. But we should understand that this is the weekly chart, guys, and even minor bounce. This could be really very significant action on the daily chart, and that in turn lead to very significant potential of the trade. So that is the background. So the core of our scenario. Now let's take a look what we have on a daily and lower time frame chart. On a daily, guys, we have the pattern that's very similar to what we have discussed on the Swiss franc. So here's the Swiss franc. Just the pivot points, and that is Japanese yen. But the difference in the top, guys, if on the Swiss franc we already have discussed this on the beginning of the week, we have the clear double repo sell pattern that's right now already is working. On the Japanese yen, we haven't quite get it yet. So because you can see here, we do not have the close below the 3x3 with this candle. That's why the first close has come only here yesterday. That was the first close below the 3x3. Now we need to close above, some close above, and then close below when we could get the double repo pattern here. Although taking into consideration this some skew in the shape of the top of the double repo, I am not exclude the chance that we could get some kind of the double repo lookalike or something of that sort. This pattern will have the same feature and the nature that is normal double repo, but it could get not quite ordinary shape. So we will keep watching for that, and I hope that will be okay. But as you can see, it's already looks a bit different compared to that one. So here we have just perfect double repo. First up, close below 3x3, close above, close below this confirmation candle, and start to move down. But here it's a bit not so beautiful. It's a bit skewed. But anyway, that's the pattern that we will be looking for, and the target of this pattern will stand at 108 even. This is 50% support from the bottom of the thrust right to the top of the double repo. So that's an area that's minimal target of this pattern. At the same time, guys, the double repo could take the shape of the hand shoulders pattern on the 4-hour time frame chart. That's particularly the new input that I would like to discuss with you. So take this a bit, a lot of lines here, but we will get through them step by step. Let me delete first this MACD indicator. That will be just clearer. So you can see that could become left shoulder head. It's 127. So the first part of the hand shoulder takes the shape of the butterfly. As you can see, this is a very good sign. Now market's forming the head. Here market could stand maybe for some longer period. Maybe it will be more extended. In particular, maybe with this head, we will get here the close above the 3x3 that we need. So maybe today market will show upward direction and close. So right now, as you can see, market is forming the top of the head. After that, we expect that market will start to form the second part of the pattern. If it will be completed, then we could count on this ABCD pattern. So we could even try to estimate the theoretical target, what this will be based on this pattern. It's approximately 110 will be for AB equals CD, and probably if we will calculate ABCD 1618 extension, that precisely will be right at the target that we have based on the daily pattern. It's around 108. So that's what we'll be watching for. Now, take a look at the indicator that I have erased. It's the MACD predictor. You will see that market has here multiple stop grabbers that have been formed. First one is right here. These grabbers suggest taking out of these lows. Here as well. Another one is minor grabber here, here. All of them suggest further moving below these lows. So that's why maybe when they start to work, market will show some downward acceleration here. Also, probably you will find some bearish divergence between the stops on the simple MACD indicator. So that's our view on the Japanese yen. As you can see, market at least forming something here. Currently, the shape of the pattern could be recognizable. It starts to look better. And overall combination, guys, of the strong support, so strong resistance on the weekly chart makes this setup not really bad, because this resistance provides us additional confidence in the possible appearing here the reversal pattern is double ripple sell, and here is probable hand shoulders that market still somehow will respect the strong resistance and will show at least a minor retracement. So 108 is not really great retracement for a weekly chart. It's really minor. So let's keep watching what will happen. Our entry point, potential entry point, guys, probably will be somewhere at this step. So first of all, we will get a better shape of the hand shoulders at this moment. Second, at this moment, probably we should get the solution with the double ripple pattern. While market will start to form the head and the right shoulder, it's probably the double ripple should be confirmed already by this moment. That's why I think the most acceptable point for taking the position somewhere at the top of the right shoulder. So let's see how it will turn.